Looking to boost your financial modeling skills? The Advanced Financial Modeler Accreditation is designed to help you strengthen and validate your financial modeling skills. In the AFM program, you will become an expert at building a world-class three-statement financial model of a company from scratch. Learn more by visiting fminstitute.com today.
Welcome to Compound Insights, a podcast by CFA Society New York. I'm your host, Rob Rowan. Today we're talking about a corner of the bond market that is large and often misunderstood. We're talking about the Sukuk bond market, bonds that adhere to Islamic law. The first Sukuk issuance that I could research came in 1990, and the market at the end of 23 was estimated at about $850 billion US. I think this is an important sector to talk about as it has, over time, had relatively high risk-adjusted returns, which is exceptionally important now as interest rates are rising and the bond market's going all over the place. With some periodic retrenchment, that also suggests that research on this sector is really important. So our research expert today is Patrick Drum, CFA. He also has CFP, and he is a senior investment analyst and portfolio manager at Saturna Capital. Now, prior to joining Saturna, he led environmental, social, and governance research and was the director of fixed income portfolio management at UBS Institutional Consulting Services. He is also a former chair of the UNPRI's Fixed Income Outreach Subcommittee and a current member of UNPRI's Bondholder Engagement Working Group. He is a former adjunct professor of finance for the Sustainable MBA program at Presidio Graduate School. He has a BA in economics from Western Washington University and an MBA from Seattle University, Albers School of Business. Welcome to the podcast, Patrick.
Robert, it is truly a pleasure to be here. Thank you for the invitation.
So, I'm going to establish that sort of most of the people who are listening to this podcast know what Sukuk bonds are from a sort of, a relatively distant perspective. So I wonder if we could start with where you place them sort of in a broad asset allocation.
It's a great question. And I think it is kind of that long stretch perspective that most individuals have. They've either heard about it as sort of a kind of a side comment, but really what does it mean and how they function and how they behave has really captured my attention for the last decade. And then I've published some content to help both address what I call sidewalk talk questions and inquiries that people would ask, but I wasn't really quite certain how to answer. So this reflected and embodies that sort of process of knowledge. What I found particularly interesting now, like you indicated, the Sukuk market is about $850 billion in size. It's soon and anticipated to crest $1 trillion. That market, right now as it stands, is larger than the European Eurodollar conventional fixed income market. So there is size. It's comprised of about 27 different currencies. There are three primary currency players that really comprise this Sukuk market. The largest is the ringgit, Malaysian ringgit, which is almost about 50%. 25% of that remaining portion is the US dollar. That's an area that I specialize much more so. And then the Saudi riyal is the next largest, about 10%. My paper is focused on the GCC US dollar Sukuk market. I think a little definition here because being CFA, CFP, we throw along a lot of acronyms. GCC stands for the Gulf Cooperative Council, and it represents 6 particular countries that are the predominant issuers of this region. And they include, Bahrain, Oman, Kuwait, Qatar, Saudi Arabia, and United Arab Emirates. They reflect and they embody over 80% of this US dollar issuance. Even though Malaysia is the largest issuer, last year they only issued about 3% of US dollars. So they're really, what then this started to embody a unique behavior and characteristics of the MENA region, or the GCC region in particular. In answering your question, because there's context is both needed and a little backdrop, kind of help provide context. But in particular, what I found is interesting, these securities, the GCC region, I track about 30 different benchmarks. In my publications, I keep using the same 7, which is, the U.S. Treasury market, the U.S. Ag, and a couple global, such as the iconic J.P. Morgan MB. But what I found is that over a 5 and 3 year period, over each of these 3 different editions of my primers, the GCC or the FTSE Sukuk Ideal Rating benchmark has demonstrated either among the top performance and returns or right now, the last 5 and 3 years as of 2023, the highest returns. But then we all want to get excited about returns in your fixed income, but it's like, wait, let's focus on risk-adjusted returns. And this is really where things become interesting, because it's not just this happens to be at this time period, but each and subsequent ones that led me to kind of delve deeper. On a risk-adjusted basis, what I found is that the U.S. dollar Sukuk market has about a third of the volatility of the J.P. Morgan, MB. And what's even more kind of like holding my attention is like, all right, it has actually 50% less volatility than even the U.S. Treasury Index and the U.S. aggregate total return benchmark. And I get often questions, well, it's a duration, and it's actually, the duration is not that different from the U.S. Treasury. It's only like half a year longer in maturity. So really, there were 6 things that came into this and embodied this that makes this a complement to an existing conventional fixed income portfolio. One is the yield spread, the high credit ratings. The third is really the low debt profile of this particular region, the pegging of the currency to the U.S. dollar. And what I call then really the last 2 really are defining it as large capital buffers and then large hydrocarbon resources. What I call plenty in the bank, plenty in the tank is my acronym.
Okay.
And I'll end it on that one.
Well, this is great. I think it's important to, it's one thing to talk about the size of the market, but also I think it's easier for people who are trained in asset allocation to understand an asset from an asset allocation perspective. And the diversification benefits are exceptionally important right now as volatility in the global bond markets is rising.
Couldn't be more so. I mean, particularly, what's interesting in this report is that all vol metrics have continued to decline, and it sort of threw in the face, well, like every central banker on the planet, it's been increasing rates. How could vol decline? Well, it's part of this, structuring of QE and in the liquidity. But at some point, that's going to be re-entering, and we're starting to observe it just now as we're cresting into May.
Right. Let's take it sort of down a notch, if you will, in terms of the altitude. Researching these bonds is exceptionally important. And, from what I can understand of them, research is always important in investment management, but boy, is it important with these bonds. So could you talk a little bit about some of the challenges in research that you've experienced while you were doing your due diligence?
It is, and it's been evolving in this particular process. And it couldn't be, I really need to stress, this has been a collaborative experience, both with my team, a wonderful group, as well as partners outside of the particular firm that I work with in the Middle East, such as, Fitch and Bloomberg, and I don't want to exclude anyone, but it's just, there's a lot of sort of collaborative process. And the Sharia investment process, of the Sharia considerations that embody and structure this have been altering over time. That sort of requires added attention. There are typically 3 different common structures. AOFI is an organization known as the Auditing and Accounting Organization for Islamic and Financial Institutions. They sort of are what would be viewed as sort of akin to the CFA Institute. It's sort of the gold standard of best practices. There are different other organizations globally, such as IFSN, which is the Malaysian akin to this AOFI organization. AOFI is a Bahrainian-based organization founded in 1990. And they sort of codified that, 14 sukuk are the predominantly okay, but really the markets coalesce around 3. And each of these have their own structures. So when you're doing this credit analysis, I think, okay, what's the credit structure? What am I working with? And there's known as a JARA, which is it's a sale leaseback, and it's very common to a municipal appropriations bond. It's a leasing, finance leasing structure, almost in every aspect. So there are some commonalities, but they're expressed differently. But then there's also sort of an agency structure, known as a wakala, and then there's a mudaraba. Those in part don't dictate too much some of the credit aspects, but they come into play. Typically, you're still applying the same credit analysis that you would be doing to a conventional note. And really my kind of insight into this particular aha moment, for a better lack of term, was at the end of the day, these structures tend to have substitutions of assets. Problem is you don't always have a lot of clarity, but at the end of the day, you'll find that most of the structures have what's called as a purchase undertaking. And this purchase undertaking at the end of the day is really where the issuer then has required and has the right and the embodied power to repurchase all these assets back from the bondholder, the sukuk holders. So at the end of the day, it becomes, to me, a credit analysis upon that issuer itself. Even though these structures are tethered to assets. and these assets could be substitutes. So it's hard to get that clarity as to what those assets are at a given point in time. AOFI's now changed these rules under what's called a Standard 59, where there were these what we called sort of asset light. Now they have to be at 51% or more asset structure. And if they fall below, say, 33%, they can become delisted. It has a lot to do with a sukuk cannot be traded. A Sharia compliant security or instrument cannot be traded for anything less than par. For like, say, working capital or receiver notes. But it can be traded if more than 50% of it has assets. So there's this what they call the tangibility, and this is how sort of this back door all of a sudden, well, how does this tangibility become a trading aspect? So from a credit analysis, you're kind of thinking about all these different structures and whether it's an asset base or asset backed, and there are different types of ways they're placed in the balance sheet. But really what was my underpinning kind of comment reading the consistent theme in the prospectus documents is this purchase undertaking. The issuer is going to come by and repurchase this back from the sukuk holders. And I thought, okay, from a very simplistic, when I was sitting on here, let's just focus on the credit of the outstanding entity. And so it became really a cash flow analysis.
Really?
Yes.
Okay, that is fascinating. So, and what is the, so the issuers, let's talk about them for a second. Who are they typically?
They are predominantly governments themselves, Saudi, the government of Bahrain or what have you, or the GSEs, Saudi Electric. In this particular world, and very much consistent with a lot of emerging market issuers, most GSEs and even corporates tend to have a lot of government ownership. They just don't have the developed markets like we have in the Western world. So there is this kind of entangled ownership. So you'll find a lot of in the credit ratings, to the extent and willingness that the government's going to step in. With the banks, that's going to be a large play more than often. So you have the government issues, the GSE, financials are a very large play into that. Interestingly, there's a large corporate play. There's a lot of corporate issuers. And now more recently, Air Lease, a U.S. Air Lease came to the market. And it's been sort of long overdue. Bank ABC helped brought this to the market. Okay. And in part, this is really perfect. See, what's unique to this particular market, sukuk tend to trade inside the curve of conventional similar notes in that region. 70% of that outstanding market size are Islamic banks, participation banks. So they have these large balance sheets. They got to either lend or buy assets. There's just a lack of supply. And so back in March here of 2023, Air Lease came to the market with, originally I believe it was a $500 million, and they decided to upsize it because the demand was over 3.5 times. There's such a demand for non-regional issuers. So now I think you might be finding a lot of non-GCC issuers coming to the market because of the favorable pricing, because they can trade inside the curve. They typically have high demand, and they're expanding their basically participation of ownership globally. So that's a unique one, but that's kind of rare at this point. Even the Philippines came to the market last year, and that wasn't sort of so-so taken. But the corporates are there. So there's companies like Almaria, which is like akin to a Darigold, Saudi Telecom, a lot of real estate related players. There's a lot of second and third tier real estate players are now coming to the market. And this is where things are getting a little bit interesting because that region has experienced tremendous growth. They're trying to double their population in Dubai under the 2040 urbanization vision plan. It's already overcrowded. You think Manhattan traffic's busy. Right. You go to Dubai. But in ending on this is that it's now starting to bring a lot of other participants to the market that didn't exist before. And so now the credit work really needs to become a little more interesting because now it's getting a little too easy to issue.
Oh, okay. Yeah. So let's talk about for a moment about oil. With the issuers being who they are, they can't get very far away from the oil market. So how do you handle that from an analytical perspective?
Thanks. No, that's a great question. So when we were first looking to launch this, when I joined my company, my background has been in ESG fixed income I've been doing that almost 20 years. And I came on board with a variety of mandates, including launching a sustainable global bond fund. And literally when I walked in, we won the sukuk engagement out of our office in Malaysia. And I was like, Sukuku? I had no idea. And it's been an absolute humbling blessing in experience of meeting these communities and so forth. But I had no idea. And this is what in part led me to write this paper and research, because there was no literature on US dollars, a ton on ringgit. And I remember we were going to these Islamic conferences, and we were kind of testing the market. Is there an interest? Because we had this US dollar mandate, but it was from Asia. It wasn't here in the US. And we knew the community here in part was at that age and stage where they needed the capital preservation asset allocation component. We wanted to honor it and serve them in a manner that was respectful, but also providing that important investment objectives. So we're asking it. I remember they're like, well, don't you know it's a risky part of the world, and it's all tied to oil. And I'm like, geez, we're trying to help you, But I thought, great questions, And so I started kind of examining, well, what's the correlation with oil? So that's part of the research paper. The 5-year correlation with oil has actually diminished quite a bit over the years. It's 17% of correlation. And now in the last trailing 3 years, the FTSE Sukuk ideal rating benchmark relative to the WTI is -7%.
-7.
-7. Now remember, MBS had a little bit of a spat with Putin, and all of a sudden the oil did trade negative. So there is that trailing. So the answer to it is the narrative is that there's a lot of questions with regards to the correlation with oil long term. To the sovereigns and the sovereigns' resiliency of their balance sheets in fiscal budgetary profile, they have done a lot to move because, again, I'm going to backdrop. You'd mentioned earlier in our side note before we talked, oil dropped in 2014 to 2016. That's when they entered the market. So oil was at a high, I think, of 107 in 26. It was in June 20th of 2014. It dropped 8 months later, 75% to like 26.11. And we would not see the price of oil rise over $50 for the next 15 months. So these sovereign funds were just burning cash. Like Saudi Arabia was almost 100 to 150 billion. They had maybe 5 years. They had to change their model substantively. They needed to move away from an antiquated model that was undiversified economy, overdependence on oil, heavy subsidizations. And it really sparked this, what now we see as Vision 2030 for Saudi Arabia and all these other sort of broad, I almost kind of view it as sort of the FDR period that we had that they're going through. Saudi Arabia's economy right now, 50% of their economy is not tied to oil now. And it's expected about 70% by IMF in 2028. Right now, Dubai is at 70% non-hydrocarbon. So that tethering is not there. The wink, wink. Their economies are still highly dependent upon oil.
Right.
We're not fooling ourselves.
Right. Well, you can't make that change too fast.
No,
right?
it's
also
a slow
has,
transition.
If you were to do it very quickly, it would be very risky for the sovereign also.
It is, and like we highlighted earlier, the government still has a lot of ownership in corporations and the GSEs, so there's still this subsidization that goes on in tethering. But from an asset performance of Sukuk, it's a negative correlation, and it sort of flies in. It's like one of these again, like I wasn't expecting that answer. Yeah. So it's hence I appreciate a little bit of the added time to kind of go into it, but you have sort of one hand going one direction and the other hand going the other. It's like, well, yes, they're tied, but not really from a performance standpoint.
Yeah, I mean, I think this is the type of thing you have to read to show my age here below the fold in the newspaper. Not that newspapers fold anymore, but back when they did.
My iPad won't look good.
Yeah, it's exceptionally interesting to me to see how some of these governments have gone into water desalination and financial services and banking and all kinds of stuff that you wouldn't necessarily think about, or even like commercial things like 7-Eleven, something like that. Convenience stores. It's incredible.
Dunkin' Donuts is so popular in Saudi Arabia. I cannot tell you.
It's amazing.
Dunkin' Donuts, you're like it's open all the time.
Yeah, it's incredible. And there are a lot of them.
There are a lot. Yeah, so you're like, who would have thunk? It's you got to smile. It's good coffee over there.
Yeah,
it is. It's evolved, and that's really kind of what sort of flies a bit into the narrative, because it's an obscure part of the world, both socially, and there's a lot of normative sort of assumptions, and we just don't know. But, if you notice recently, Saudi Arabia has been upsetting the cup, whether you're into soccer, notice the FIFA, certainly in the golf world. And I understand recently they might have been stepping into the bit of the tennis. And I I don't follow some of these sports. I tend just to like a good baseball game. Yeah, hopefully they'll leave that alone. But it's evolved in ways that you couldn't quite imagine, and their influence is interesting. I mean, the GCC region, it's 55 million people, about 0.7% of the world's population, 2.2% of global GDP, yet they satiate a third of the world's energy. And they're interestingly moving in a transition to be remaining relevant in a low carbon economy. It's fascinating seeing how they're moving in these directions, but also diversifying with these large giga projects. Yes. Like the NEOM, or the Gidia and so forth. But yeah.
Yeah, it's exciting it's an exciting place to learn about, in my opinion. It is also, kind of interesting to see how they get involved with things like sports that they can get into, because some of those, like tennis, is relatively cheap to invest in compared to its advertising reach. So it's not, the NFL is great if you're one of the owners, or if the MLB is great if you're one of the owners.
Agreed. Yes.
But it falls off pretty fast after that.
Yeah. So perplexed how water is 5 times multiple when you go there.
Right. So thank you, Patrick, for this, for this walkthrough. It is a fascinating market.
I'm grateful for the CFA Society of New York to provide this opportunity, and I'm grateful for those that provided this introduction.
Yeah, and I really would encourage anyone who's listening to this podcast to, Bloomberg has some exceptionally good data on this, so head over to your terminal, take a look at that. We're going to post Patrick's primer on the show notes for this, and take your research seriously, because as I said before, research means a lot in this subsector. So it means a lot, period, but it means a lot in this subsector. So thank you all for listening to this podcast. Until next time, I'm Rob Rowan, and this has been Compound Insights.